Hi everyone, and welcome to Endeavour's first Virtual Connect event. Topic today is cash and capital raising during the current crisis. I quickly wanted to introduce myself, Alison Collier. I lead the Endeavour team here in South Africa, and then introduce you all to the panel. It's fantastic. We've got a wonderful panel of very experienced investors and entrepreneurs. So from the investor side, Marc Herson, he's an Endeavour advisor. Then the two other investors on the panel, Rob Dower and from Allan Gray and Andrea Bohmert from Knife Capital. And then on the entrepreneurs, Pieter de Villiers, the CEO of Clickatel, and Aisha Pandor, CEO of SweetStar. And before getting into the panel discussion, I wanted to just share some context with you all on Endeavour. So you've got a good understanding of this as we go into the panel discussion. So a little bit about the Endeavour organization. Endeavour is a global organization. It's headquartered out of New York. We've got offices in 35 markets. And Endeavour, what Endeavour does is it's here to support and accelerate the growth of medium-sized entrepreneurs. The entrepreneurs, and how do we accelerate their growth? It's really through three different avenues. One, we provide access to markets, and that's the key focus area for us. The second is access to talent, and then the third is access to capital and capital mentoring. And a lot of that is what we're going to be focusing on later today. What's the belief and philosophy of Endeavour? It's that medium-sized entrepreneurs that are fast growing are really the engines of growth of an economy. They drive both the job creation as well as the revenue growth. And so Endeavour is really here to support economies and economies' growth, and through the support that we give towards medium-sized entrepreneurs. Then moving closer to home, so South Africa. So just an overview here of the portfolio that we support today. Currently, we work with 26 Endeavour entrepreneurs. There are probably more like 50 to 70 entrepreneurs who are in our pipeline. And as you can see from the spread, it's majority of the teams are in our tech-based businesses. And that being said, mostly enterprise software services. We've got a number of really successful fintech businesses, and then also edtech plays a very big role in our portfolio. Then just to give you a sense of the profile of these entrepreneurs. So if we look at the performance of these entrepreneurs over the past 2 years, the annual revenue growth has been in the region of 27% and the job creation 29%. But what's really impressive is the typical average revenue of the businesses we work with are just above the 200 million rand mark. So if you look at the 26 businesses as a whole, together they've generated 1.6 billion of additional revenue over the past 2 years. And just the back end of 2019, we're making a contribution of close to 5 billion. And then if we're talking or looking at jobs, these 26 businesses collectively created close to 5,000 jobs over the last 2 years, employing close to 12,000 people towards the end of 2019. In addition to that, the majority of the businesses are raising capital and successfully raised 1.4 billion over the last 2 years. Not all the businesses are capital raising those. Many of them are profitable. There are also two other things I wanted to talk through. One, it's again a key focus for us for the last 2 years, is increasing the diversity of the entrepreneurs in our portfolio, both Black and also female. And it's great to see the results. We've got a number of strong female founders and quite a few businesses in our portfolio now that are Black founder-led. Then one of the amazing assets that Endeavour has is its pro bono mentor base. And if we look back over the last year alone in 2019, the mentors donated over 840 hours to these 26 Endeavour entrepreneurs, but also to our pipeline and portfolio. And without these mentors and without the pro bono work that they did for us, wouldn't be able to provide the service to our entrepreneurs. Then to give you a flavor of the caliber of the mentors, I wanted to share with you just an overview of our South Africa board here in South Africa, as well as the patrons. The patrons are typically founding board members. So today, Herman Bosman, the CEO of RMI, he chairs our board, and he's supported by a really strong set of board members: Barry Swartzberg from Discovery, Also Ernst Goes, who used to be the CEO of Outsurance, Bukani, Accenture CEO. And then to complement that, we've got some really strong entrepreneurs. Andreas Kambistis, who is an Endeavour Entrepreneur alumni, and then Zake and Candace, both are Endeavour Entrepreneurs today. Yeah, so with that, just want to hand back to Marc, and Marc can take us through the panel discussion. So thanks so much and enjoy the session.
Okay, hi everyone. Yeah, welcome to the Endeavour panel. Sure. So we had about 180 people register for the event, which is pretty incredible. This is the first type of event that I've done. So excited to be doing this, even if the circumstances are very unusual, to say the least. So the title of the panel is Cash and Capital During COVID-19. Just a few things in terms of tech. All the attendees are automatically muted, and the video and chat is also disabled. But there is an open icon at the bottom of the screen, the Q&A icon, where you can ask questions, and we'll aggregate all those questions together. Please leave your name and company name, and we'll try and ask some of those questions towards the end of the panel. There's also a chat window. There should be a chat window with some information in there if you want to have a look at it, with some links and Twitter handles. Yeah, I think let's get to it. I'm not going to say too much other than you know, we're definitely living in unprecedented times, and as you know, Seneca said, you know, life is courage, and living is courage. And I think for entrepreneurs at this time, you know, being entrepreneurs, I think an extreme act of bravery. So I think we at Endeavour and everyone else, I think salutes everyone that's on this call, and all the entrepreneurs that are out there every day sort of battling. But without sort of further ado, let me start. We'll have two esteemed entrepreneurs in Aisha Pandor from Sweep South and Pieter de Villiers from Clickertel, and then two investors, Andrea Bohmert from Knife Capital and Rob Dower, who was until recently the COO at Allan Gray, and now sort of leads all the digital ventures and venture investing activities at Allan Gray. So Rob, I'll start with you. Easier asking the questions, harder for you to answer them. Just to give us a sense on what Allan Gray's view is on the future economic impact of you know, COVID-19 in South Africa and globally, both sort of generally and with respect to startups would be great, and then just to get a sense on who you think the winners and losers will be.
Okay, thanks, Marc. Yeah, so easier to ask that question than to answer it. Obviously, there's quite a lot about this crisis that's pretty unprecedented, and it's got more than one layer. So trying to answer the future impact thing, I guess, first of all, clearly it's a health crisis and a humanitarian crisis first, but that's developed into kind of an economic crisis, and then also in lots of places a crisis of liquidity. So it's a bit difficult to say what the future impact is going to be, except that it's going to be pretty dire. In order to deal with the health aspects of this thing, we've pretty much shut down the global economy. So that's bad. What makes it harder is that it's not clear how long we're going to have to keep it shut down for. And even in places that are quite a long way down the road, it looks like coming out of it is going to be tricky. So in China, you know, it does look like the process of getting back to normal is going to be a bit more drawn out for all of us than what it would be in a normal, just purely financial crisis, of course. That said, it looks like things will play out towards the end of the northern summer, and that the economy can start to get going again after that. The rate of recovery is going to depend on how much damage has been done in the interim, both to individual balance sheets, so people are not going to be rushing out to buy stuff, and to company balance sheets. So I think corporates are going to keep their horns in for quite a long time. And then Just to talk about the financial markets a little bit. Of course, this thing is kind of like a reverse bubble, right? When people need cash, then they sell things, and the act of selling things drives prices down more and means that there's even more need for cash as investors try to meet margin calls, and people who are overgeared have to repay some of the, or at least make, top up the collateral against their loans and things. So the economic crisis resulted also in a bit of a cash crisis. If there is some positive, it's been that it's driven some behavior change. So we talk about the impact of this thing on the economy. You didn't say whether I should say negative or positive. So I'm going to try and find some positive. Of course, there's behavior change in the use of technology. You can see that in what we're doing now. I've been working in corporates. I'm sorry to say, amongst all you entrepreneurs, I've been working in corporates since I was 17. So that probably makes me a lesser being than all of you. But I can tell you that the change management impact that's happening now is just extraordinary compared to what would normally be the case in big organizations. So we're being forced to adopt and use and invent technologies in a way that would not normally be the case. And I think that's a big opportunity for a lot of businesses. It's a big threat to a lot of incumbents maybe as well. And then also in the theme of behavioral change, and kind of as a segue into, you talked about the SA impact. Of course, what we've been looking for is a crisis of the scale necessary to drive some reform in the government. So although we're not coming into this thing as a country, we're not coming into it in the best possible shape by any means, neither financially, it's not like we've got full kitties, nor humanly. The government is, if anything, a lot less capable than it was 10 years ago, and it was already stretched. We've been hollowed out by the Zuma years. Lots of people have left state organizations. So we haven't come in the best of shape, but where we are now is, I think, at a point where the reformists in the government are winning the argument about what should happen next, rather than having to chase others. So I think that's good. While I'm on SA, the financial markets have been hit quite hard in South Africa in dollar terms. I guess everybody knows, much harder than elsewhere in the world. Part of that is because people can get their money out of South Africa. So international investors have taken quite a lot of money out because we're liquid, and amongst the emerging markets, that's a good thing when things are going well, but it's a very bad thing when people need cash. So assets in SA have sold off more than elsewhere. I think that means generally that when you're an investor looking across startup and listed and more mature businesses, the bar starts to get a little bit higher for what's attractive. So if you can buy, let's just pick a kind of a fairly standard, so you can buy Standard Bank on around about 1 times its assets. Okay, so you could say maybe they won't be able to collect all the loans that they've made out, but still, over the history of that business, you normally would have had to pay 2 times its assets because the business itself is worth something as well. So you can get Standard Bank at a 50% discount to what would be its long-term value, let's say. So when people are raising money or thinking about the attractiveness of investing in newer businesses, the alternatives for investors are much more attractive than they would have been before this. I think that's a real thing at the moment. You said who will be the winners. So that's I could carry on about impact forever, but I'm probably going to repeat a whole lot of stuff that everybody reads in the newspapers anyway. So our investment team are extremely excited about the valuations, if that's any encouragement to you, and bringing money back from overseas. A lot. And the game in South Africa has always been to try and buy things from foreigners when they're cheap. So that's what's happening right now, and to sell them when they're expensive. So right now, all the asset managers in SA are buying things from foreigners at massive discounts, and that's very good for South Africa's savings.
Okay, great. Thanks.
Let me just quickly go on winners and losers. So the winners, of course, amongst people, the winners are going to be the rich, which is not good. The winners are going to be knowledge workers, and I suspect the winners are going to be millennials, which is slightly irritating, but good thing for them. Companies, obviously, there's some that are more or less impacted. The tech providers to companies that need to make change quickly will be winners. Mobile money, I think, will be a winner. Losers will be people who don't survive the crunch in between. So in order to win, you have to survive the next 3 months. So that I would put as my biggest category of losers. I think lots of viable startups and established businesses, long-term viable, are going to fail in the next 3 months simply because they didn't have the resilience to get through what's going to be a really tough period.
And one last question for you, Rob, just before we move on to Aisha and ask her what the impact has been on her company. What's your or Alan Gray's feeling on how long this is going to last for?
Yeah, I really no better feeling than what you might have, Mark. I think you've got to you've probably got to be conservative in your planning. So hope that it lasts until, the global recovery is going to be led by all those rich countries north of us. And let's hope that they start to come out of things, I don't know, July or August, and start ordering the things that we dig out the ground so that our economy can start to recover on that basis. I don't think South African consumers are going to get kind of excited about spending money anytime soon. So our economy is going to recover on its kind of long-term engine, which is things that we dig out the ground and sell to manufacturing economies elsewhere. So maybe, I don't know, maybe July, August, but I've got no idea. So luckily, Alan Gray's kind of okay to get through. We've got resources that we've kind of stacked up in good times, pretty much however long it lasts. But so someone told me a story about a huge business, an international business, that told them they had 4 years worth of cash reserves 3 weeks ago. And last week they were in the market raising $11 billion. So the problem with being an incumbent is you've got a big revenue line that feeds a big cost line. And if the revenue line starts to get close to the cost line, then the gearing gets unbelievable. You lose 5% of revenue and suddenly 4 years of reserves turns into, should we better raise money next week?
Right.
I think that's what's exciting about lots of new startups, is that they might not have lots of revenues, but that also means you have a long way to fall.
Exactly. So, and obviously the impact's very different depending on the type of business you are. Aisha, what's been the impact on your business and I suppose, and your users and your community?
Yeah, Mark, so it's been pretty drastic, particularly the lockdown. I mean, our business, like a lot of kind of these platform marketplace businesses, depends on people interacting directly. And so lockdown has meant that effectively our core business, for as long as lockdown lasts, isn't able to operate. And so that's had a drastic effect. I think in addition to that, what's been really difficult is the uncertainty around like how long this is going to last. And trying to plan for uncertainty where there's so many different variables, as Rob was saying, is this president going to make the right decision? What is the impact of decisions he makes? How is that going to affect the rest of the world? So it's been really, really difficult to try and kind of plan for how long this will last. And I think we've done exactly that, is just try to be as conservative as possible. And say even with the lockdown, it's probably going to last for months post, the initial 3 weeks. So, you've gone from millions in top line sales coming in within a month to, within a week of a decision being made, that kind of effectively going down to almost zero and having to cater for the same amount of, employees and all of the other costs that the business has. And so how we've responded to that is that fortunately we have different verticals in the business, and there were plans to kind of put resources to growing those verticals later in the year. We've moved some of those plans forward. So one of them, for example, is our Connect app, which deals with electricians and plumbers, and some of those things are essential services. So kind of looked at what can we do during this time? How can we leverage off of the team, the technology, maybe future plans brought forward and execute during this time. But I think, again, you have to try and find the balance between, this is temporary. We don't know how long it will last, but it's a temporary situation. markets, economies, people, consumers, everyone will bounce back. And you don't want to take the eye off the ball with a recipe that was working, apart from this huge kind of black swan crisis, and leave that business because for a few months it's unable to operate. So I think a challenge for us has been trying to balance the team's attention between how do we continue working on core business and making sure that when the time is right for us to get that up and running again, we're able to do that and have an even better service. And then also kind of relatively short term, but not completely out of whack with strategy overall. How do we bring some of these other things forward? And then I think, just other impacts on the business. I mean, we were in the midst of raising a bridge funding round, and so I've had to have some tough conversations around, what does COVID mean overall for the business to some potential new incoming investors, and so that process has also, I suppose, taken longer than we would have thought. And then on the sweep stars, obviously, the broader community, it means people who were earning income through working through an app are now no longer able to find work. And so what we've done there is kind of reached out to our community on the day when the lockdown was announced. And again, you never know until the announcement is made what it's going to be. So it's so difficult to react to it. But on the day, in fact, the day before the lockdown was announced, we kind of sat and went, well, what if this becomes complete lockdown? What do we do with sweep stars? What do we do with customers? And so on the day the lockdown was announced, our engineering team sat down and they implemented a new way for canceling bookings for long-term kind of subscription customers, where you could cancel your bookings, but be able to contribute to sweep stars on a continuous basis. Literally within a few hours, kind of devved that up and shipped it out on the web and the app. And so, we're quite responsive, I suppose, in that regard. And the other thing that we've done is we've put together a fund that is being contributed to by the Dower Foundation. So they've contributed 6 million Rand towards a fund that we're targeting at 12 million Rand. And that should cater to most sweep stars' basic necessities for the next 3 months.
Sure. And what have you done that's incredible. And what have you done as a business to conserve cash and as well?
Yeah, so I mean, and again, this started kind of before lockdown, when we could see that, we were probably heading in that direction. And so it's everything from reaching out to all our suppliers and see who could absorb some sort of payment holiday. We kind of have structured a generic email kind of template proposal that we've sent out, and some of our suppliers have actually used that for other customers, and said, this is a really good idea. Why don't we do this for other people? We've asked for rent holidays across the different cities. We've looked at short pay for staff. I mean, it's always last resort, but it's something that we've also had to implement. And, the kind of message there is that taking these measures now will help us to avoid any retrenchments at a later stage. And I think that's one of the difficult decisions that we had to make, is almost slightly overreact now to help the business in the long term, because again, there's a lot of uncertainty, and, day to day, week to week, a big decision might be made that has a huge adverse effect on the business. And so you want to try and find the balance between business continuity and having kind of the basics in place, but also, catering for those things.
Great, thanks. Pieter, so you've seen quite a few, you were around in 2000 for the .com bubble bursting, and then 2008, and now this. How does this compare to the other crises, and how have you responded?
Yeah, Mark, I think Theodore Roosevelt once said, to know your past helps you prepare for the future. And so, indeed, we've survived 3 crises, as we call them. The .com bust in 2001. Perhaps the first lesson for the group that are entrepreneurs looking to raise capital. We actually managed to raise capital in 2001 after the .com bust. And I think the lesson there that it is possible to raise capital. However, it was the most expensive capital we ever raised. and will raise, hopefully. And so, to Rob's point earlier, investors and LPs are spoiled for choice. If they're not dealing with redemptions themselves, quite frankly, they can go buy Apple stock or Visa and know they're going to make money. And so capital raising in this time is possible, but it's super expensive, and the cost of capital in emerging markets are even more severe. The second crisis we survived was 9/11, shortly after the dot-com bust, and there's something different happened to our business. Essentially delayed our go-to-market for the US by 4 years, and essentially international travel changed. And while I think we are all focused on COVID-19 and when we get out of lockup, I think international travel for the next 18 months will not be the same. And so if we think it was hard and difficult to get around and do business on a global scale, it's going to be excruciating. I remember LAX looking like Calcutta 4 days after 9/11, and all our plans, all our conferences being changed and upset. So I do fear that if you have a startup looking to expand internationally, and you or your founders would the go-to people to close those big deals because you can't afford a sales guy in market, that's all going to be different, and you have to rethink your strategy and your organization around that. And in 2008 financial crisis, I remember the moment we received the invite from Sequoia, basically being summoned to their offices, and we show up, and the parking lot's never been that busy. We all arrive in this boardroom, and we basically get Doug Lehone's RIP speech, which is the famous email that did the rounds. And essentially, 4 days later, we were on a plane to London, which turned out to be the toughest week of our career, where we had 34 exit interviews over 5 days to make sure we have enough cash for 12 months. And I think unless entrepreneurs are very quickly making the tough choices, and make those tough choices once, you can't do this by 1,000 cuts. It's way too excruciating. But unless you can't assume that in 3 months from now, we are going to be back to normal. Even though the stock market seems to be going up, the universe, I think we all realize, is going to be very different. In the second part of your question, I'll talk about what I think is going to happen to this 8-headed monster and why it's not 3 months, but perhaps 18 months. Your question was, what did we do in our business and what are we seeing? So I'll give you an example. Our business are lucky. For those that don't know what we do, we essentially enable chat commerce for large consumer brands, which means you can connect, interact, and transact with your customers wherever they are through chat, things like WhatsApp, airtime purchases for MTN, and apps like chat banking. And so what are we seeing? We're a global business. So first of all, our crisis started in different phases. And so we were lucky that we were about 2 weeks ahead of South Africa's lockdown because we saw what was happening to clients in Europe. But United Airlines, for example, is down 90%, 90%. And so imagine you were an entrepreneur in the travel sector, and you had all of these good playbooks and these mentorships and all of these incubation programs that you ran through to give yourself a great strategy. In comes COVID-19 and you have no clue, and you're down in the dumps. We see a rise in our business in Nigeria, where we do lots of mobile payments and transactions, but we are scared because we think that it's not just COVID-19, right? It's the oil price on top of COVID-19. It's the FX on top of the oil price. And so we see a significant impact about to come down in Nigeria, although that business is surprisingly doing better than we expected. So the biggest challenge for entrepreneurs is that depending whether you're South African markets focused, where I think the moving parts are less, but you probably have an event horizon concern around how do you get into international markets when you can't travel. If you have international business, you have a rolling thunder problem where you have to deal with these different market conditions as they come live, and then the curve flattens. So we did two things in terms of responding. We're lucky that in many ways, we are lucky. There's more demand for digitization and chat. But we did do a non-essential new hire freeze. So while we are still hiring some roles, we have just cut 67 hires and just said no until September, and we'll reassess. We have moved all of our cash into hard currencies 2 weeks ago. Anything that we could, whichever currency our money is, because it's one thing to do cash planning, it's a whole different thing to do cash planning in hard currencies. And that was real work involved, because you don't want to transfer pricing rules and tax and all kinds of things. And so moving cash into hard currencies, all discretionary spend on OPEX, travel, etc. went out the door. And we're doing 2 times a week stand-up on cash. So those are some of the things we're doing, aside from working from home, keeping our employees safe, and all of the other things you guys have read in all of the playbooks out there.
Great. Andrea, on your side, from the funders' point of view, how has it impacted you? Yeah, how have your LPs responded?
Yeah, it hasn't been pretty. I mean, let's put it like this: if you're a funder, I think we are in a fortunate position that, let's put it like this: our own life. I get a management fee. Those things are not affected. So you know what, we are very, very lucky there. But if we really kind of go and look at our portfolio and what's happening in the kind of ecosystem, no, the last few weeks have been hard. I mean, we have currently 7 portfolio companies, and they're all impacted to some extent. Some positive. If you are in e-learning at the moment, that's fantastic. That's great. If you are working in the health tech sector, that's fantastic. But if you are a company like Cricket, who was doing really, really well, ticketing for events, and then, I mean, they were growing like crazy. It was a fantastic, it's still a fantastic business, but I mean, they were doing so well, and all of a sudden, there's no events anymore. So their revenue is down to 0. And so I'm just saying, so it's been hard. So last few weeks, all we've done is kind of spend time with each portfolio companies trying to figure out how much is what is the impact? And if the impact is negative, how bad is it? Do you need, I mean, do you have enough cash flow? If not, how much do you need? How much do we have to kind of go and make available? So what we've done is we did a very quick, very rough assessment of how many of our companies are going to go and get into a cash crunch, need money to just kind of go and sit this out. And then we went to our LPs and said, this is a new situation. And the problem with our fund is that, I mean, the problem, but we are a Section 12J fund. And therefore, there's certain things that we are not allowed to kind of go and do. So for example, by mandate, we are not allowed to kind of go and give loans. So therefore, we needed to kind of go and find a way of how can we kind of go and make money available on a short-term basis to kind of go and help these companies. So we need to go and come up with some ideas of how to kind of go and do this very, very quickly. So how have our LPs reacted? So there was no doubt and there was no pushback whatsoever. Everybody just said, we have to make sure our company survives. I think that was good. However, I have to say there are some investors then who kind of go and come and say we should be the funding of we should be the first funders. So we should just go and say here's money, and others come and say no, let them first try to go and find the money somewhere else. We should be the funders of last resort. And that's then an interesting one. And you learn a lot when you kind of go and speak to, when you are in a crisis like this about how people kind of see this and so on. So it has been stressful and it will be stressful. And I think, again, as everybody has said, because we all don't know how long this is going to go and last, the question really is, what is the impact and how do we need to kind of go and change the business models? And again, it's quite funny. We are in the middle of our audit. Now, you know what? Our auditors are now doing evaluation of all our assets. So we have just kind of go and we have, of course, we just had financial year end and we had valued our assets and it was all fine. And now the auditors are coming and saying, well, we don't believe your valuations anymore. You need to kind of go and revalue all your kind of things. You know what? This is, of course, it's not this is a stupid problem for us to kind of go and have, but it just shows how how quickly things can go and what kind of impact it could have, and so on and so on. So yeah, it's been hard. There's been a lot of work, and it's soul destroying. Of course, because we have money, we get all those phone calls from entrepreneurs who are desperate for funding. But it's just at the moment, as if we are so busy just dealing with our portfolio companies, we can't just quickly kind of go and say, we can quickly kind of go and solve your cash flow problem, because we are at the end equity investors and needs to kind of go through due diligence and so on and so on and so on. So just having all those conversations in the last few weeks, yeah, with other entrepreneurs as well, with our own portfolio companies, to see how quickly value can be destroyed. And it will all come back, and we all know this, and we will, with our portfolio companies, make sure that they get through it. But yeah, I must say, I had a few days where I wasn't in a good mood, because it's hard to see what's happening in the industry.
Where are companies getting, if they're needing bridge capital, is there any capital available? Yeah, where are they going? I mean, must be a couple of angels out there. Where are people finding?
So I think I would hope that if you have current investors, I would hope that current investors come to the party. I assume most of the others do as well. I mean, I can't speak for them, but what I see on certain forums and so on, I think many of them are coming to the party. If you do not have investors and you need bridge capital, I honestly, there are certain funding sources available, and to be honest, I think there will be more available coming soon, because I think at the moment, more and more people are now starting to really go and understand the economic impact that this has. So I really do believe that there will be more money, but there won't be enough money. I wish I had a solution. I wish I would know where people can kind of go and find bridging capital, but yeah, if you don't have access and good relationships with those with money, sorry,
Andrea. If a company is coming to pitch you now, first time, what are the things, and let's say there might be a cash crunch much closer than would be normally expected. What would the advice be to them?
So if they come to us now for the first time, so we are open for investment. Absolutely, we are. Time is an issue. I have spent the last 3 weeks, 16 hours a day, just dealing with my existing portfolio companies. So to really kind of go and spend now time on a full due diligence is difficult, but I mean, we are talking to a few kind of companies. If there's urgency to try to kind of go and get money very, very quickly, I doubt that you can do this by starting a process. People are simply, they are busy, and to really kind of go and do all of this. I mean, we have, unfortunately, it's other people's money. We need to kind of go and do a due diligence. We need to kind of go and do those things. And even if we would go and try to speed it up as much as we can, if we had all the time in the world, it would still take 6-7 weeks. I mean, it's close to impossible with legals and so on to kind of go and do it quicker. So one of the things that we are, of course, looking for in terms of if we have to assess a company is do they understand what the new normal is going to look like? Sure, you might have had a business model before. Is it impacted? Well, if it's not, good. But I think many businesses, as Pieter said, as Aisha said, I mean, certain things have changed. And have you considered this? And what is your reaction to it? And how are you preparing for the next? So absolutely. I mean, we want to invest. We are going to invest. We are in due diligence with a company. Stop this. But you definitely start asking slightly different questions, because it is important to understand what the new normal is, what the rules are going to be afterwards. Maybe they don't change, but if they do, we need to understand that the companies are prepared for it.
Right. Great. And Rob, from your side as an investor at Allan Gray, what tips would you have for companies coming to you now, or companies that are out there? What sort of good behavior, bad behavior if they come into pitch? What tips generally would you have for them? I think the mute button's on there.
I agree with Andrea. Kind of your first port of call is your existing investors, because you have aligned interests with them, they should be also quite keen for you to get through the crunch. But if you're in a conversation, so if you're going back to an existing investor and saying we need some cash to get through this, I would say the first thing that you have to be able to show is that you're making some changes to your business in order to to try and make whatever cash you have last as long as possible. So if you come and say, look, we're going to carry on spending as we have before, and we're going to need a little bit more money because the revenue line is down, then if I was an existing investor, I'd say, I'm sorry, that you come back when you've kind of made some concessions also on how you plan to take this forward. So, and I think the best conversations are the ones that are happening already, or people that are onto this already at the beginning of last week saying, can we talk? I've had a really hard look at my cost line, and the following things actually are discretionary. And, we've chatted to the team and we've decided we'd rather all take a little bit of a cut rather than lose some of our members because we're going to need them at the other side, and yada, yada. So that's kind of, and then if you can't speak to existing investors, then if you were coming to me as a new investor, I would say, well, like, what's happened to the guys that have funded you so far? Like, so I think people do have, and it's unusual for someone to be completely tapped out of cash in this, who are in the startup world, because often people are keeping cash just for opportunities. So it might be that they're tough conversations with existing investors, but that should still be, that would be a sign for me if your existing investors are not keen to put more money behind it. It's also some point at which you have to recognize that something might be harder than what's possible. And then the third thing, which is quite interesting to me, is, again, and others have mentioned it, is that there's obviously, like, there's a big change in the world right now. So probably in many cases, a big change in strategy needed, and sometimes even more cash needed in order to capture that. So I think the real challenge, and this requires like a very tight dialogue with whoever's going to give you the funding to do it, is to say, okay, well, I'm recognizing now that I'm going to need actually to double down on some investments in order to capture what feels like a once-in-a-lifetime opportunity in my business. And Mr. or Miss Investor or Ms. Investor or Mrs. I need your help to make this happen, because it's not going to come around again. This is our big chance. If you can take someone along with you on that, like, that feels like maybe the toughest of all conversations and the most valuable of all conversations. Yeah. So we've got one kind of medical technology business kind of in our portfolio where the strategy needs to change, and that's going to cost some money, and they're raising like a lot more money now than they had planned to just for that, and have gotten investors excited enough about it that the terms are not terrible. So I agree with Pieter that you've got to be careful raising money in these kind of times, because it's hell of expensive. But if you have a fantastic opportunity, then people are just as greedy now as they are in good times. Just got to help people to understand where the opportunity is.
Aisha, do you have anything to add to that in terms of just fundraising tips, and how are you going about? You said you were in the middle of a bridge round.
Yeah, so I mean, I think evidently not yet, but let's see. But I mean, definitely I've had to shift plans and be honest about it, right? Like, I think kind of just going ahead as if it's business as usual is a really bad idea. So one of the things that our raise was contributing towards is an expansion outside of the continent, and and a launch in Latin America. And obviously that's that we don't know when that's going to happen, so we haven't kind of included it in exactly the same way as we did in the original conversation, and have been quite explicit about the fact that that's a big change in strategy. So I think, yeah, the one would be just don't kind of go business as usual. And then I think, again, to the points that I think both Andrea and Rob are making, is don't just go, well, we have exactly the same cost structure, please invest. You've got to also show from your side that you've taken necessary measures and been prudent as a a leader, co-founder, whatever the case is. And so, you know, we now have a specific slide that talks about the various cost-cutting measures we took both prior to lockdown and then post-lockdown. And then I think just maybe in terms of like some of the general things that we've done that I think have been helpful is, the one is, so as Peter was saying, don't kind of delay it, you know, and kind of death by 1,000 cuts and, you know, just rip off the Band-Aid. And there's a reason why all of these analogies talk about cutting and Band-Aid and whatever, because it's painful. And they're often painful decisions you have to make. But I think we made a decision as a management team that we were going to act fast and hard and early. And then, you know, you can always dial that back if you need to. The other thing was setting up a specific task team that meets 3 times, well, we meet 3 times a week, but, you know, a specific task team within the business that deals with kind of the business under these conditions. Because I think it's difficult to be managing the rest of the team, being taking care of kind of other operations, you know, and all of the concerns that everyone has, blah, 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 and then also be focusing on what is our specific response to this condition. So that's something that's been very helpful for us. And it's also been a group of people that the rest of the organization can go back to if they've got questions or concerns, again, that are specific to this scenario. Another thing that we've done is kind of put any sort of pride or ego aside, and our strategy for asking, you know, whether it's suppliers, investors, landlord, whatever it is, just ask. People can say no, but, you know, don't kind of let your ego get in the way of asking for help. Also communicating honestly. So we've been quite honest with our team about the situation that we're in. We've been honest about there being some things that we don't know and information we can't share because we're uncertain. But at the same time, I've also tried to shield the team away who are probably already feeling quite anxious, you know, from our own kind of anxieties and worries. And, you know, so it's trying to kind of find that balance. Another thing is looking at opportunities. You know, so as Rob was saying, is if there's an amazing opportunity, then, you know, then definitely look at how you can address that. But I think also at the same time, and I'm sure he'll agree, is being realistic, again, that this is a months-long situation. Don't pivot your entire business that has been operating well under normal circumstances to try and grasp an opportunity that's only going to be relevant, you know, for a few months. So just, you know, keep your eye on long-term strategy. If you're thinking about opportunities, how can you leverage existing infrastructure in the business, existing operations, processes, technology, etc. So it must make sense. Short timing, so and looking at kind of staff costs. A lot of businesses are doing it. A lot of businesses are retrenching. One of the things that we found helpful is to look at other benefits and pausing other benefits to kind of supplement so that you don't have to reduce salaries as severely as you might otherwise have done. That's been something that's been well received by our team. I saw there was a question, one of the in the chat around marketing, and I also had this as a point, is if there's no demand for your business, don't spend the same amount marketing. I mean, it seems obvious, but it's something that could potentially be overlooked. So if there isn't demand, scale down your marketing, look at other ways to engage with your customers. Also, don't do tone-deaf marketing. So some companies have just, you know, don't mention COVID, and kind of the marketing is as if everything is like normal. That's really weird. So, you know, kind of be authentic with your customers, with your team. And then maybe one of the last things would be just having a plan that looks at different scenarios, which I think has also been helpful for us, is kind of a best case, kind of medium, and then a worst case scenario, kind of getting a feel of which one does it look like we're going into, just to help you feel a little bit more prepared for whatever's coming.
Fantastic, great. Just before we get to Pieter, if anyone has any more questions out there, just send them into the Q&A and I'll try and ask them with a little bit of time we've got left. Pieter, the last question for you really is around sort of the same theme, but what do you believe the key priorities are for startup leaders now? You know, what tips do you have for the community?
Yeah, I think entrepreneurs, Mark, are the best positioned to deal with this. And so I have no doubt that if anyone's going to survive this, it will be the entrepreneurs. No offense to the financiers. And so if you look at what we're dealing with here, I'm hoping that the entrepreneurs are away from the deer in a headlight situation by now. I mean, lockdown has been there for more than a week, and we have to move on. And while we don't know how long lockdown will last, we certainly know that this thing will last at least 18 months in some way, shape, or form. And the reason I'm saying that is because of this sort of 8-headed monster that we're dealing with. First and foremost, if lockdown stops tomorrow, then people will have apprehension around where they go and how they go there. And so we will not move the same, and certainly large sporting events and large sort of celebrations will be delayed for a while. You know, COVID is like cash. As long as there's one cash bill in the marketplace, somebody needs to accept it. As long as we don't have a vaccine for this thing, then we will have to watch the way we operate. Otherwise, this curve will go up and down and we won't flatten it. So ultimately, if a vaccine takes a year and we have 7 billion people to vaccinate, you can do your own math. It's an 18-month journey. And so unless you figure out what the 18-month like COVID environment looks like, you're not planning. Trying to have runway for 3 months is not the answer. You need to survive 18 months. Now, it won't be as severe as the last week, but it's not going to be standard operating procedures. So people and behavior will change, number one. Number two, the stock market may come back. A lot of people lost a lot of money and savings and wealth has been wiped out. It takes a long time. In fact, there are many analysts who show how long it takes for the recovery, depending on how deep you went. And so this is not the same as 2008, right? 2008 financial crisis. People will not affected the way they are affected with this crisis. People have lost relatives, have lost staff members. There's a whole ramification of hundreds of thousands of people dying in our society. Thirdly, travel restrictions will not ease up anytime soon. The US are certainly not going to allow LATAM to come and go as they want to. And so this will change, Sweep's health plans to go into LATAM. Good luck in getting through quarantine, sitting in a 2-week trip and being stuck in a hotel in quarantine for 2 weeks. It just doesn't make any sense. And so that's going to take quarters, not weeks. Number 4, the oil price. Markets that are oil dependent will fundamentally take a much longer time to recover. FX, we were at 15 just the other day, we're at 18 plus now. That's a fundamental implication for your business if you're in the wrong currencies. Trying to find a dollar-based expansion with rands just became 30% harder if you look at your profit and your margin, your calculations there. And then things like debt. So this is sort of a doom and gloom picture, and I'm not trying to sort of be negative. I'm just saying that, if your business is in travel, if your business requires international offices, expansion, these things, you have to fundamentally change your plan. And if you have to pivot, then you have to pivot. But I also agree with Aisha, you don't have to change your entire business because of your local impact is different. So I think that rather give your money back to your investors and stop the madness. And rather earn the right to go back for money when things are normal and you have an idea. But if you are in travel and some of these sectors, you have to become a domestic travel company perhaps, as opposed to international travel, and figure out that for yourself. So I think there's a lot of things we need to be truthful about, that this is not 3 months, or is it 16th of April or the end of April. This is an 18-month journey with different ramifications in different markets. And it's best to get some advice on this pretty quickly.
How do you think about, and maybe this is a question for us all to think about a little bit, but staying with you, Pieter, how do you think about support within your own support? How you deal with it as a leader, and then support within your own company and maybe the broader community in South Africa, which is not we're a very nascent community. There's there's a lot of changes that are happening, but we're small and we're vulnerable.
Yeah, I think, we have a saying that when the going gets tough, the tough gets going. I mean, I think that it depends on the individuals, right? I'm lucky. I think many of us are lucky that we're fairly healthy. I have one executive with COVID-19 in a different marketplace, and he's struggling to breathe. And so his productivity is very different to mine right now. And so these are realities that we are facing. I mean, what we don't realize is that we're going to get this thing unless there's a vaccine, if we go back to normal. So I think at the moment, maybe three tips. First of all, information overload is going to paralyze you. If you do not manage what you take in terms of information and graphs and things that you're following in different groups, you will be paralyzed. And it's your responsibility to not get trapped in that. Secondly, I have confidence that every founder will lead in this time, because just getting to where they've gotten to this point is hard yards. And so this is just another crisis in a different way. Well, it might be a deeper one, but I have no doubt that founders, their DNA is such that they'll rise to the occasion, but they would need mentorship and coaching. And I think, Andrea, the idea that funders are saying, look, I'm not going to give you a handout, but I'm there for you and I'll support you is fantastic. And I think that's exactly what the good VCs and funders are doing. The fact that the company was, had a lawsuit last week by a funder is insane. I mean, but that's a different discussion. And then lastly, I think that the community matters, endeavor matters. This idea of paying it forward, this idea of coming together and helping each other out is useful, but we need to be careful, because there's so much usefulness that we are overloaded again. And I think that having a cadence of when are we connecting, and every week or 2 weeks at this date and time is a slot, come if you want to, but constant information battering is not helpful. We have a job to do. So I would just say, manage your time.
Yeah. Aisha, how are you managing your time, and how you sort of been sort of supporting yourself, your mother, now you've not only your co-founder with your husband. I mean, you're all on top of each other.
Yeah, I mean, it's been difficult, and I think to Peter's point, like, you've got to just try and find, especially dealing with the business and the team, the kind of the leader within you that's appropriate for the time that we're in. So, it's very different leading a team when things are going well, or even if you have kind of quote unquote normal challenges that businesses have. You're having to now kind of deal with people and recognize that, we're talking about people who are very sick, potentially in your own team, people who are dying. There's the constant kind of bombardment of all of that information. So I've thought a lot about kind of leadership and how I lead during this time with the team. And I think empathetic leadership, and I think even when communicating difficult decisions, I've always just tried to think about the fact that, everyone is going through this in very different ways. I've encouraged my team to kind of be okay with whatever it is that they're going through and feeling, and to be able to voice that. Sometimes it's resulted in a lot of kind of input on private kind of DMs on our team Slack, with everyone talking to me about whatever things they're thinking about at that time, which is fine. But I think, so definitely kind of empathetic leadership has been important for me. Delivering bad decisions, or not bad decisions, but bad news to the team, and kind of, thinking about the fact that, again, there's a long term to this, and you have a business reputation. People will remember how you treated them, how you treated customers. In our case, how we treated sweep stars during that time. The family side has been really challenging. I mean, I have 3 very young kids, and I'm dealing with a business in a crisis situation where, there's no help, and my partner is in exactly the same situation, because he's my business partner. So it's been incredibly difficult. And, I've got young kids, so they're at the stage where you need it for, bathroom, nappy change, brushing teeth, food, absolutely everything that they do. So it's been really tough. And And I think I've just been very authentic about it. And I think it's thrown some people off. When people ask me how things going and they expect me to talk about the business stuff, I'm like, you know, I'm dying a little bit at home with my kids right now. So I think it's just, yeah, and I think it's a time because, you know, everyone is working from home. Many people have children or pets or whatever. So I think it's just a time to just be very honest about it, be authentic, kind of recognize that I'm not going to be as on the ball and necessarily available as I would otherwise be, and probably not as professional as I would otherwise be. But yeah, just being upfront about that.
Great. Rob, maybe just finishing off with you. Any advice that you have around leaders?
Just to touch on, yeah. So firstly, to kind of round off on that funding and trying to plan under uncertainty. Of course, the classic thing is to try and have options. So in a very uncertain world, you want to try and maximize the number of options you have. There are two ways to do that that haven't been mentioned. The one is to have discussions in advance with funders. So you said, you know, we've got good runway, but the world might be completely different to what we expect it to be. Therefore, can we just have a discussion in principle about what would happen if we needed cash in a year's time or 8 months' time? Can I know where you stand? That might be a useful discussion to have well in advance of it being necessary. And to be matched with, this is what I'm going to do in a year's time if things haven't sorted themselves out, or if we end up with this path or that path. Can you also help me kind of understand what you would do to support us? That kind of funding discussion might be useful. And then on leadership, just two thoughts on leadership. The one is, and Aisha kind of alluded to this, is that this is an opportunity. Like if you're a leader, this is a brilliant opportunity to show people that you care and what happens in a crisis with you as a leader. So like you have to rise to it, and you have to recognize that people will judge you for how you behave right now when they're stressed, more so than would normally be the case. So it's probably best to err quite heavily on the side of being human and understanding and empathetic, rather than being hard-nosed and businesslike. So that's with your employees and customers, not with your funders. You can be hard-nosed with your funders.
Or your
fine.
Yeah.
And then as kind of someone who's led quite a lot in organizations and relied on human connection, I'm glad I'm not trying to lead Alan Gray right now. I think it must be really hard to go from being able to have one-on-ones with people in person, or meetings around a table where you can judge how people are reacting to you, to trying to do that through a screen. It's just so maybe just the only thing I can add to that kind of as a possible is to try and put structures in place that will force you to do certain things rather than have to invent them every day. So the daily stand-up, or an email update once a week now instead of once a month, or deliberately doing more one-on-ones than you would normally do, and fewer big meetings, because big meetings are really hard on the screen. So that would be my.
Fantastic.
Yeah.
Anyway, thank you so much. Peter, you want to add one last thing?
Yeah, just a quick one. The daily huddles is a no-brainer. It's absolutely fantastic. We actually have done it for the last 2 years, never mind COVID-19, 15 minutes, real strict daily huddles. Google it, absolutely.
And who's on that? Your senior management?
Exco.
Yeah. Okay. Fantastic. This has really been a great conversation. Thanks for everyone for joining. I could definitely have carried on for a long time asking you questions, especially in the last little bit about leadership and how we all support each other. But for me, just in parting shot, it's a real time for us to think about how we want to live our lives in the next three months and 6 months, and how we want to be able to look back over the next, when we get there, and say, how did we behave? How did we connect with others? How did we lead others? And how did we support others? But anyway, thanks very much for joining us. As Endeavour, we're here to help and really helping entrepreneurs achieve their grandest visions. So if anyone needs any support, please let us know. Thanks for joining.
Okay, well, thank you so much, Mark, and to the rest of the panel. What a phenomenal session. I really loved it. Got a lot of learnings, and I hope the same was true for all of you. For me, what was really useful was to have the global perspective that was shared by both the investors and the entrepreneurs, but then put it into the local South African context. So thanks so much. But just in closing, I wanted to share the resources that we as Endeavour have made available to all of you and to our Endeavour entrepreneurs and mentors. Please take a look at our local website and just go to the COVID-19 crisis page. We've curated a short list of really relevant webinars, papers, as well as some wonderful positive success stories that are there for you to look through. And then in addition to that, we've got a much broader and deeper set of resources in our global resource center. The link is on our website in the same page. And there are well over 200 documents and success stories and webinars that are also freely available for everyone to use. So please make use of them, and looking forward to seeing you next time. Okay.